Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we'll explore 5 effective ways to invest your hard-earned money wisely. Instead of fleeting indulgences, make wise financial choices that yield long-term benefits. Investments are like seeds that grow into a prosperous future. Utilize your funds strategically to generate income and appreciation. First, understand that investments involve acquiring assets to increase their value and generate cash flow. Avoid misconceptions like considering your car as an investment due to its rapid depreciation. While houses may appreciate, they are primarily liabilities. Prioritize investments that generate returns. Consider stocks as a promising option. Focus on publicly traded companies shaping the industry, such as Netflix, Amazon, or Tesla, known for exceptional growth. Diversify by allocating a minimum of $1,000 to at least 15 different companies with significant potential. By making informed choices, your $15,000 can pave the way to financial freedom. Stay tuned as we explore additional strategies for intelligent wealth growth. Number 1. Invest in stocks. The first and foremost method to maximize your $15,000 investment is by exploring the world of stocks. Investing in stocks allows you to seize the asymmetric upside potential, where the chance of significant gains outweighs the risk of losses. Picture this. You allocate $1,000 to each of the promising companies you believe in, like emerging players in the 6G technology or Tesla's top competitors. While there's a possibility of losing your entire investment, the rewards can be immense. For instance, a remarkable 1,000% return could transform your $1,000 to $10,000. By diversifying your investments, the triumphs of a few can outweigh any setbacks, generating substantial profits. Number 2. Acquiring existing businesses. Next, let's consider purchasing established businesses as an avenue for wealth creation and the second best way to invest $15,000. By becoming the owner of an existing business, you can leverage its customer base, operations, and brand value. This approach offers immediate revenue generation and growth potential. Thorough due diligence is crucial to ensuring alignment with your goals and future success. Explore local business brokers or online listings to find opportunities. Investing in a business allows you to tap into a market with untapped potential. With as little as $15,000, you can enter the realm of more significant ventures that yield substantial profits. Number 3. Commercial real estate. Let's discuss the third way, which is commercial real estate. It's a promising path for investment, and contrary to popular belief, you don't necessarily need a hefty sum beyond $15,000 to get started. Banks are actually willing to offer financing for between 50% and 60% of the property's appraised value. And here's an interesting insight from a commercial real estate expert, DOL Hughes. DOL Hughes emphasizes that the value of an empty commercial building is directly linked to its generated revenue. By securing tenants for vacant properties, their value can double. This increased worth is recognized by the bank, which can alter the down payment requirements. Typically, a 50% down payment is expected, but DOLU's strategy has a significant impact. Let's say you want to purchase a property for $1 million, but its value doubles to $2 million after finding a tenant. The bank acknowledges this appreciation and reduces your required down payment accordingly. This means you might only need $15,000 or even less to enter the commercial real estate market. Commercial real estate offers an exciting opportunity to leverage your $15,000 investment and explore larger properties using creative strategies. Before we continue, don't forget to give this video a big thumbs up, subscribe to our channel, and ring that notification bell for more updates. Number 4. Residential real estate. The fourth option to consider for investing $15,000 is residential real estate. By putting down a 20% down payment on a property, you can make the most out of your funds. The potential return on investment or ROI is impressive. Just imagine if your property generates a 25% ROI. Over 20 years, your initial investment could grow to a substantial $4.3 million. Residential real estate offers long-term appreciation, regular cash flow, and a chance for significant capital gains. To maximize your returns, carefully choose properties, conduct thorough research, and consider rental income. Remember to factor in expenses like maintenance, property taxes, and vacancies. Educate yourself, seek professional guidance if needed, and make informed decisions to succeed in your investment journey. Number 5. Seek mentorship. One often overlooked but highly profitable way to invest a substantial amount of money is through mentorship. Surprisingly, having a mentor can lead to incredible financial gains. Research has shown that individuals with mentors have a higher likelihood of achieving success. The key to building wealth lies in surrounding yourself with people who have already accomplished what you aspire to. I'm not referring to coaches, imposters, family, or friends. I mean individuals who have set their sights on achieving significant financial milestones. Personally, I have mentors who have achieved remarkable success, and their guidance has resulted in exceptional returns on various investment opportunities. Many people hesitate to invest a significant amount of money in mentors, questioning whether it's a wise use of their funds. However, let me assure you that investing in mentors has consistently yielded remarkable results. On average, I've received returns of 5 to 10 times the amount I invested. For instance, if I spend $10,000 on a mentor, I expect to see returns of $50,000 to $100,000. So, why are mentors so valuable? They possess invaluable knowledge, experience, and connections that can provide shortcuts to success. By investing in a mentor, you gain access to their expertise and network, which can significantly enhance your investment opportunities. If given the choice between traditional investments and investing in a mentor, I would confidently choose the latter. A mentor's guidance can open doors and create opportunities beyond the limitations of a single investment. Consider allocating a portion of your investment funds towards mentorship and experiencing the potential it holds for your financial growth. In conclusion, when deciding how to invest $15,000, it is crucial to make well-informed choices that match your financial objectives and risk tolerance. With a wide array of investment options available, it is important to seek strategies that strike a balance between potential returns and risk management. Take the time to thoroughly research different opportunities and consider diversifying your investments to spread out the risk. If necessary, don't hesitate to consult with a financial professional for guidance. Moreover, it is vital to recognize the value of patience and adopt a long-term perspective when it comes to investment success. Avoid being swayed by short-term fluctuations and focus on the bigger picture. Remember, it is essential to find investment avenues that align with your specific circumstances and desired financial outcomes. What are your financial goals and aspirations? Reflect on what you aim to achieve and consider your $15,000 can be strategically allocated to support those goals. Share your thoughts in the comments below. Lastly, be disciplined in your planning and exercise prudence in making wise investment choices. With careful consideration and thoughtful execution, your $15,000 has the potential to pave the way for significant growth and long-lasting financial prosperity. Well, that's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.